Welcome to Landmark Talks Property, a podcast by Landmark Information Group that covers all things property in short and intelligent podcasts.
Hi everyone, welcome to the Landmark Property Podcast. Today we're here to talk about our Quarter 2 2026 Property Trends Report. I'm joined by my colleagues Richard Hepburn, Ben Robinson and Rob Gurney. Richard is Managing Director of Landmark Scotland. Hi Richard.
Hi Mike.
Ben is Managing Director of Landmark Estate Agency Services. Hi Ben.
Hi Mike.
And last but by no means least, Rob Gurney, Managing Director of Ochresoft. Hi Rob.
Hello.
So the property trends for Quarter 2 2026, as always, there's some interesting stuff to talk about. I think the headlines for us are it shows that there is a subdued but resilient market. There's been obviously lots of external factors impacting the property market, from potential changes in leadership, the war in the Middle East, the impact that that's had on inflation and swap rates and therefore mortgage rates, and all of that starts to come into the mix when we look at property transactions. If I quickly just talk through the headline numbers that we've seen over the quarter, and then we'll jump in and talk to our experts on some of the detail in their areas. But in terms of headline, listing volumes for the quarter were down just 1% compared to the same quarter in 2025. Sales subject to contract were down 7% compared to the same quarter in 25. Search volumes down 8%, and then countering all of that, completions were up 23%. So I know there is lots of reason for that we can talk about, but in terms of the headline figures, the start of the pipe, people committing is a little bit more subdued, but a good quarter for completions and transactions completing and people moving house. So if first up we jump to Ben, so the voice of the estate agent. Ben, can you talk us through what we've seen on the market supply listings from the estate agent's point of view?
Yeah, no problem, Mike. Supply actually ended up being subdued. It wasn't too bad. It was pretty flat. Ended up dropping off towards the end of the quarter, anecdotally. So, out in the market, talk to people. That tends to follow a subdued sales period because, of course, property stops selling. People start asking questions, as you mentioned. Outside influences also impact people's decision making, so sellers choosing not to sell, especially coming into summer and summer holidays when the outside world looks a bit uncertain. There's lots of stock around at the moment that's stuck, and again, I'm told that a lot of that sort of ex-rental could be more difficult to sell. Sometimes it's bad condition, but often as well the owners are less motivated by dropping price for a rush. They'll wait until they get the right price, so you actually end up with some property stuck outside of what is now a market value, and that can be difficult. And I think we've seen a lot of that, a lot of that impacting the market and properties coming through, which ended up being 3% down in June. So that was the worst month of the three. That sort of lag effect.
That's interesting. Thanks, Ben. And now moving on to the demand supply variance. I guess as always, one, can you talk us through what it is, why it's important, and why we measure it, and then secondly, what Quarter 2 looked like?
Yeah, I think at the end of the day, it's a demand sentiment, isn't it? It's our properties coming to the market, great, but are actually people wanting to move? You can argue a seller coming to the market wants to move, but how committed are they to buy? And if a lot of it's ex-landlord stock, that's properties without an onward purchase linked, and so it's basically a reflection of the properties coming to the market, how many are selling. And if you look at some of the underlying data around that, on average, it's pretty poor. We're seeing, in the 60%, and 60%'s not great. In fact, it's probably one of the weaker periods that we'll have seen post-COVID anyway. But on the flip side to that, if we look at the recent trend coming towards the end of the quarter, we saw a bit of a resurgence on the demand side. But demand supply variance, that show a dip at the same time in supply. So obviously sometimes it's the dip in the supply that makes demand look better. But demand coming back a bit, supply going down can also come back to what I said was the lag factor before. It takes a subdued sales period to start to often affect new listings, and then at the end of the quarter, new listings were down. The potentially positive outlook, if demand is coming back towards the end of the quarter, that people will start to see sold boards go up, and that does trigger, actually now's a good time to sell. So perhaps, with a lag, we'll see supply pick back up again as we go through this quarter.
Interesting. Thanks very much, Ben. And moving on next to look at the conveyancing market activity, and over to you, Rob. Can you talk us through what we've seen in conveyancing?
Thanks, Mike. Yes, quarter two in terms of conveyancing instructions can be viewed as an encouraging quarter actually for new cases, with positive signs of growth actually in transaction numbers building consistently throughout that 3-month period, and that kind of like disguises the fact that that we're still below where we were this time last year in terms of transaction activities. But as I say, it's an improving position. Volumes were down 10% in April compared to April 25. But that evened out slightly to just 7% in May. And then we were just 4% down in June 26 versus June 25. So you can see that sort of that kind of recovery versus last year's position occurring throughout the 3-month period. And in fact, June ended up being the strongest month so far for new cases, both in real terms and in comparison to last year's levels. So there was an element of positivity, I suppose, as the market seemed like it was returning during that 3-month period. Why was there a dip in April? Because we obviously started the quarter 10% down, as I've just said. I think that was much more to do with the fact that April 2025's performance was directly impacted by the SDLT change, and I think it's probably more that than the market conditions of April 26, if I'm honest, because April 25 performed slightly better than perhaps we were expected a year ago, because the market started moving again at the front end after the SDLT stamp duty changes that took place. So as I mentioned, overall the SSTC volumes were down 7% across the quarter compared to the quarter two of 2025. Completion-wise though, completely different matter, and volumes throughout that quarter were 23% up versus the same quarter of 2025. And when we break that down into months, April was actually 50% up, May was 14% up, and June 6% up. So before we start sort of slapping each other on the back and popping champagne corks, I've got to say that context is everything here with these numbers. And obviously, most law firms would not have noticed a remarkable uptick in completion numbers during the preceding 3 months. And that's because these stats are obviously being compared to what was happening between April and June 2025. And I'm sure you'll all remember, we just had that massive spike in completions. Anything that could have gone through in March 25 did. We had a huge amount of completions going through in that month, which obviously meant there was pretty much nothing ready to complete after that for quite some time. So, April took a massive hit in terms of completion numbers. And what we saw was it wasn't just a 1-month recovery period needed to get back to sort of normality, and it took the entire quarter, which means, that's explains why we were 50% higher, and then obviously 14% higher in May, 6% in June. I would say that by the end of quarter two last year, we'd pretty much normalised again in terms of expectations in the market, which means that next quarter's podcast, we should be comparing apples with apples for pretty much the first time this year.
Thanks very much, Rob. Really interesting stuff. We're next moving on to got me for the next couple of sections. First of all, looking at the property search trends, and then followed by that the mortgage valuation data. So from search, as I mentioned, searches tend to follow SSTC. So when a property goes under offer, next stages are our lawyer is instructed, and then after that searches are ordered. So unsurprisingly, pretty similar to the numbers Rob's just been talking about. So overall search order volumes down 8% in the quarter. Although interesting, we saw a slightly sharper dip in May, and then as Rob talks about there, a recovery in June. So June was down only 1% in terms of search ordering compared to June of 2025. So we will watch this space. Both I think the stats that Rob was talking about and the stats that in search shows promising signs and things moving in the right direction as we move into the summer and quarter three. So it'll be interesting to see how that comes out, and we'll talk about that for quarter three when we reconvene in October. So next up, we look at the mortgage valuation approvals. There's slightly different data in here in that mortgage valuations include remortgage activity, and what we saw was an interesting market in mortgage activity, and that's driven by really what we saw in the back end of quarter one. So anyone who listened to our property trends report for quarter one will know that we saw a pretty unprecedented quarter for mortgage activity, based on the fact that there was a flurry of applications come in March as people tried to capture lower rates before lenders had to reprice upwards following the increased swap rates and the Iran war. And that trailed through into this quarter, where we saw over a 20% increase year on year on mortgage approvals in April, as that backlog of applications started to clear. And then as we moved into May and June, we saw subdued activity, because a lot of those mortgage applications were applications that were likely to come later in the year for remortgage and moved forward for people to try and capture the better rate. So it's almost a shuffling of applications that were likely to happen already, but certainly on the remortgage side. And what that means is that for mortgage approvals in May, there was a 11% decline year on year in mortgage approvals. There is no Bank of England data yet for June, but the mortgage valuations for June were over 11%, just over 11% down on June last year as well. They're a pretty good indicator of what's going to happen for mortgage approvals. So we expect June's mortgage approvals to be in line, if not slightly below, what we saw in May from a year-on-year point of view. So that concludes our section on England and Wales. And as always, waiting patiently in the background, we've had Richard Hepburn, who is our Scottish representative, on the call. So Richard, now is your time. Over to you. How's Q2 been in north of the border in Scotland?
Thanks, Mike. I think we've seen a few different effects in Scotland. The market has been pretty subdued, I think, particularly on the listing side. So we've actually seen a more dramatic downturn than Ben noted in Scotland. So we've actually seen Q2 is about 9% below 2025. So that's the kind of overall listings activity. In terms of search and how things flowed through, that was broadly flat, but then started to drop off as the quarter continued, so about 6% down versus 2025 for the quarter. And then as we moved through into sort of the completions, I think that was pretty well matched in completions, and we're starting to see a bit more activity in terms of fall throughs in Scotland than we normally see, which again is another sign of a weakening market. And also we had another factor beyond the others you've already spoken about, Mike, in terms of the wider economy and war issues. We had a Scottish Government election in May, which obviously has tax raising powers and property taxes, so that clearly creates a little bit of a sort of different scenario in the market.
Always a slowdown in the lead up to an election as uncertainty rules. Thanks, Richard. And in terms of a couple of the metrics that Ben talked about, so market supply growth and demand supply variance, how have those looked in Scotland?
Yeah, so as I said, basically listing volumes down about 9%, and I think looking behind those and speaking to people in the market, same factors in England: economic uncertainty, affordability, so definitely dampening appetite, and we're also seeing higher remortgage activity in Scotland. There is still quite a lot of stock hanging over from late 2025 and Q1 2026, so I think that's obviously affecting the market as well. We have got a kind of possible incentive coming though, or already started. Scottish Government have introduced their First Homes Fund, and one of their first activities supposed to come into power in May. So that's £10,000 in support for first-time buyers, purchasing properties up to 300k. So usually the experience is when you put things like impetus like that into the market, it has a knock-on effect all the way up through the ladder. So it might stimulate a little bit of growth in Q4. In terms of demand, a little bit like Ben, I think we're actually seeing that really, both supply and demand really tracking each other. And that's, I think partly down to the buoyant stock levels. And I think there are just fewer transactions are now moving to what's normal in Scotland. There's usually a sealed bid process. We're seeing quite a lot of properties being relisted at a fixed price. So that suggests the market slowing. People are having to either drop their price expectations or put a fixed price in place to secure a sale. And as I said, this just mirrors what's going on in England, I think. Seeing demand drivers around Iran, and with the added complexity of the Scottish Government election.
Yeah, absolutely. Thanks, Richard. And how about searches?
Yeah, so I mean that kind of tracks all this really. No, as in England, no usual mid-year seasonal bounce in 2026. Everything's been very flat since the beginning of the year. Both core search and completion searches remained flat. We're also starting to see a lot of activity happening later and close to transaction close dates. So I think the other effect that's coming through in Scotland, which isn't the norm, is that we're starting to see more chains appearing. So that's suggesting that there are more things happening later in the transactions. So people might tend to hold off buying some searches until much later. So that's hitting us as well. We did see a little spike post the Scottish Government election in terms of completions, but that certainly started to tail off now.
And last but not least, search to registered sales.
Yeah, so obviously this is where we track our pre-completion searches to the Registers of Scotland registration data. It does lag a bit, so it's not so easy to get a direct comparison. But I think generally we're seeing, as you'd expect, a similar pattern coming through from that. The registration data is mapping what we're seeing in our sort of pre-completion searches. So market weakening from a slightly stronger position early in 2026.
Excellent. Thank you very much, Richard. So that brings us to the close of the Property Trends podcast for Q2 2026. I think, as we discussed, the headlines are one of stability but subdued activity. Stock levels are healthy. SSTCs improved throughout the quarter, and we saw strong completions year on year. Obviously, there are a multitude of external factors that are beyond the control of everybody in the industry. Talking things like the war overseas, inflation, elections, changing governments, affordability across the piece. The increasing rental stock is an interesting comment that Ben made. That's impacting supply and demand variance. But ultimately, these are things beyond the control of people in the industry. We all continue to work. It would be remiss of us not to mention the government's announcement into the property market reform, which is around reducing the friction on transactions in England and Wales, and we fully get behind that as Landmark and agree that reducing the friction in property transactions makes it easier for people to move. And Richard has on many a times talked about the difference between Scotland and England at the moment when we talk about time to sell, and factors like that. So that's all encouraged. We look forward to meeting up again after quarter three. So thanks very much again to Ben, Rob and Richard. As always, our trends report can be downloaded from the Landmark website, and podcasts can be found on all the regular podcast platforms. Thank you very much.